Good afternoon. This is Sean Golding with Golding and Golding, here to go over a bit about cryptocurrency taxes for the new year being 2023. This presentation goes along with an article that we wrote that's got about 25 frequently asked questions, but let's focus on some of the basics, right? Crypto is kind of working its way back up again. The IRS is really pouncing on taxpayers as of late, so let's go through the basics. Forgetting the fact that the name has currency in it and the complexities of underlying blockchains and et cetera, it's not currency for U.S. tax purposes. It's an asset. So crypto earnings are taxable, and earnings are different than if you're just earning money, right? For example, if you exchange your crypto with someone else's crypto and you have a gain, you got to pay tax on that. If you sold your crypto, you got to pay tax on that. If you invested in a crypto fund, ETF, foreign CCOV or something, and it's generating dividends or interest or capital gains, you got to pay tax on it. If you're receiving it for salary or wages, let's say, independent contract, you have to pay tax on it. So the general theme is just because it's taxable. Just because you don't have it in your hand doesn't mean that it's not taxable. Okay. Enforcement is on the rise. So a few years back, maybe 2 years back, they started with these letters 6173, 6173A, 6174, and soft letters. What they're doing is putting taxpayers on notice that, hey, we've received this information about cryptocurrency that may be associated with you. We don't see it on your tax return. Here's your chance to fix it before the next level. And the next level is the IRS has also been auditing and examining taxpayers. So if you have unreported cryptocurrency and that particular exchange reports to the IRS, then there is a chance that you have a higher likelihood of being under audit or examination. If the IRS audits, examines you, or determines that there's underpayment, significant underpayment, you may have accuracy-related penalties, 6662. If they think it's fraud, it's a bit of a jump, right? Just because you didn't report it. Most people don't think you have to report it or include the tax, but if you don't, and they think it's fraud, there could be significantly more penalties, and that could lead down a darker path, but it's not common, so nothing to worry about unless you're acting fraudulently. One very important topic that's been coming up more recently lately is international foreign cryptocurrency. We've been handling it for a while. The issue is whether it's reportable. So the IRS handles the FBAR, even though technically the FBAR is not on an IRS form, it's on a FinCEN form. IRS handles FATCA. From a baseline perspective, a recent publication came out, I think it's publication 5569, that says if you have cryptocurrency only in an account, that's not reportable. But if it's in an account with currency that would be reportable, then guess what? It is reportable. You can't just put crypto in an account and say, hey, the whole account's not reportable now. If it's a hybrid account, they would call it, then it's reportable. Also, there has been a Notice 2020-2, which has been around for a little bit, about 2 years, where they're proposing to require taxpayers to report foreign cryptocurrency similar to what they would if you had a foreign bank or financial account. The idea being is they want transparency. FATCA is the Foreign Account Tax Compliance Act. More than 110 countries and hundreds of thousands of foreign financial institutions report U.S. taxpayers. For FATCA purposes, there is a chance that it is reportable now. The IRS has not come out strictly and said one way or the other, but it's an asset, and assets are reportable. Let me give you an example. If you have a stock certificate, foreign stock certificate, we're talking about only, right? The realm of foreign, international, offshore, overseas, things like that. If you have a foreign stock certificate, that's not reportable for FBAR, but it's reportable for FATCA. If you take that stock certificate and instead you have a foreign stock account, well, that foreign stock account is reportable for FBAR and FATCA as well. So then the idea is, well, the cryptocurrency, is it an asset that's reportable for FATCA, even though it's not technically in an account per se? So that's something to consider. A lot of people are on the side of caution and report it. If not, you may have an argument against it, but chances are, since the IRS wants transparency, you may want to consider the pros and cons of that approach. PFICs are passive foreign investment companies. If you have If you're part of a cryptocurrency investment fund, sometimes even unit trusts overseas, and you're receiving dividends, capital gains, even if you're not, if it's just growth, that fund is reportable. The income is reportable as well, but the fund would be reportable as well. And depending on the value of the fund and if you're getting any excess distributions, you may have to file a Form 8621 for PFIC, which is probably way more complicated than you thought when you made that investment. May not be worth it because you get taxed at ordinary rates, unless you make certain elections, but those have to be done timely. If you're out of compliance, there's various programs that you can use to get into compliance. There's a voluntary disclosure program. If you're willful, just can't certify under penalty of perjury that you're non-willful. You got the streamlined procedures, delinquency procedures, and reasonable cause if you're non-willful. We got a ton of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate to your offshore matter, and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.